Alright guys, welcome back to another video. Today's video is going to be about a gap fill trade that I took on the ES earlier today. It was for about $2,600 on 5 lots. Now this was a gap fill trade. Now if you're not familiar with a gap is pretty much um, just when the market opens away from the range of a previous day. So for example here, this is the high of the day for the 9th of October. On the 10th of October, we opened up here at 34.96, right here, in this yellow or orange square that you guys see right here. This is where price opened, leaving a gap behind. Okay. Now, in this day, the low of this day was right here. Okay, at 34.90. Okay, and then we continued going higher. Okay, so when we opened on the 13th, we had a gap established here. Okay, so this is an imbalance in price. This is like a void. Okay, a low volume area that is likely to get filled. Okay, markets don't like these voids. They don't like these empty spaces, and so they will likely fill out if they get traded into. Okay, not every time, but most of the time. Okay, so as you can see here, we have another gap, right? So it's like a void where there is no trading. Okay, normally the market looks like this. It fills out every single hole. Okay, it doesn't like leaving gaps behind. Okay, you see here, price opened away, but it filled the gap during the same day, so it didn't leave a gap behind. Okay, so the trade that I took was just a simple gap fill, and anybody can take these trades. It's pretty simple, right? So obviously we have a pretty downtrend, pretty clear, and then as you can see, we start trading inside this gap. Okay, so once you start to see that the prices are starting to trade inside the gap, you want to start thinking, okay, the likeliness or likelihood of a gap fill is increasing by the second. Okay, this is very likely that we're gonna go all the way down towards the gap fill here at 34.74. And so all I did was look for an area where sellers kind of started getting aggressive, and you could clearly see that they're piling in, right? Which is what happened right here after we tested it, right? We tried to test outside of it, we couldn't get anything, and then you see, look, sellers, right? If you have a good knowledge and you can see that the speed of the market is increasing, and you just jump in with them with very low risk, right? Maybe put your stop above the candle of entry, right? Not too much risk, right? Because this is a momentum play, so if you're wrong, you shouldn't really give it that much space. But if you're right, it should be pretty much go in your direction right away, immediately. So that's how you know if you're right or if you're wrong. Okay? And then you just ride it all the way to the bottom where the gap is supposed to be filled. And that's about 14 points in profit, risking about 1 3/4. Okay? Now this happens all the time. This is a pretty simple trade that anybody can take. Okay, just keep in mind the context, right? If the market is kind of coming down after the previous day, like couldn't even fill the gap, right? But we got close to it. That's the key. We got close to filling the gap, right? So you know there's intent. You know there's some sort of interest in filling the gap, right? As the market kind of just got close to it. So you know they're starting to show a little bit of conviction to the downside. And then the next day you kind of get a downtrend day, right? Downtrend. And then you just start kind of trading inside it. Okay, very simple. You know, again, the price is likely to fill. And so you just take a trade, you watch for momentum, the speed of the market increases, you jump in with them, and then you just ride it out. Okay? Really nothing too complicated. Pretty simple trade. Okay, again, the key is speed increase, right? Look for a speed increase in the tape in the market, and then just jump in with them, right, at a good price. Obviously, if you jump in the middle right here, then it's obviously a different story. You don't want to do that. So you need to be pretty fast, right? So see that the market's increasing, increasing, increasing. Jump in, low risk, and just ride it. Okay, I don't want to keep repeating myself. I think you guys get the point. But yeah, that was pretty much it. There's really nothing too complicated about this. You can do this anytime. Again, if for example, if we were to trade all the way down towards here, 33, 34.50, right? This gap right here, I'll probably do the same thing, right? If we start trading lower, 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 and I see a good opportunity where there's an increase in momentum, you know, the speed picks up, I will just jump in, throw a small trade there. Small risk there. You know, don't have to risk that much, and I'll just write it down with the momentum. Okay. So just look for those opportunities. That's why it's important to keep an eye out for those. Um, I do post these levels every single day for you guys to look at. So I mean, I just recommend that you screenshot them, or if you're in my mentorship group, I share the levels exactly, so you only have to click a link and you get these levels automatically. So if you want to check that out, but yeah, I post these every day. I do the analysis for you guys, so you just take a screenshot, put them in your own charts, and you know, just watch those levels, and you know, they don't make a big difference to you guys. But anyways, if you have any questions, you guys know where to find me in the Discord. Just reach out to me in the free Discord, um, the futures chat room on Discord, and then you know, I'll get back to you guys as soon as I can. But anyways, make sure you guys like the video, share it, or you know, subscribe if you haven't already. And thanks for watching. I'll see you guys next time.